Hello and welcome to SWOG Academy. In this video I will make an in-depth stock fundamental analysis of the company ADYEN. I always had this stock on my watch list, but it was overvalued. Now it is down over 60% from its all-time high and looks more attractive. I will cover its history, business model, growth, balance sheet, profitability and valuation. ADYEN was founded in 2006 by Peter van der Doos. Its headquarters is in Amsterdam, Netherlands. The company has $29 billion market cap. Its stock is trading around $900 at the time I'm making this video. ADYEN is a single payment platform to accept payments anywhere on any device. That means it works with businesses, allowing them to accept payments on mobile, at point of sale, and from marketplaces. That includes payment from credit cards, debit cards, and bank transfer. The company makes its money based off of processing fees and payment method fees for every transaction. As a payment processor, ADYEN derives its income by charging a predefined percentage of the transaction value along with a fixed fee per transaction. This transaction fee varies depending on the payment method, such as credit cards, debit cards, and digital wallets. ADYEN requires only one system, one process integration, and one contract for a multinational enterprise to serve customers in 150 plus countries and to accept 200 plus methods of payments. ADYEN primarily targets merchants, particularly those in the e-commerce sector. It also serves large multinational companies, medium to small size enterprises, and startups. ADYEN grew its revenue from $154 million in 2014 to $8.93 billion in 2022, 58x in 9 years. By checking the income statement for the first half year of 2023, ADYEN revenue grew by only 21.5% in 2023, which is probably the reason why the stock dropped so heavily to its current valuation. Nevertheless, it has been an impressive growth, and 21.5% is a very good growth year over year. No company in the world can continue to grow by 50 and 60% for a long period of time. Now let's check the profitability of the company. The gross profit is the result of revenue minus the direct cost to create these revenues. The gross profit margin is the result of gross profit divided by the revenue. The gray line in the chart represents the gross profit margin over the years. ADYEN gross profit margin is 14.9%. It has been in a downward trend since 2014, meaning the company is being less efficient over the years. Next, let's check the operating profit and the operating profit margin. Operating profit is the net income derived from a company's core operation. It is the amount of money that a company has left over after meeting its operating costs, but before paying its taxes. ADYEN operating profit is $665 million in 2022. So operating margin is 7.4%, meaning for every $100 the company generates in revenue, ADYEN makes $7.4 operating profit. It is again clear that the operating margin is decreasing with increasing revenue. Usually I like to see it increasing with increasing revenue. Now let's check the free cash flow of the company. ADYEN grew its free cash flow from $142 million in 2014 to $1.92 billion in 2022, an increase of over 13x in 9 years, an impressive growth. Now let's have a quick look at ADYEN's balance sheet. ADYEN has $7.086 billion in current assets. The current assets are the assets that are liquid and available to the company within 1 year. They include cash and short-term investments. The total current liabilities are the liabilities which the company must pay within 1 year. ADYEN total current liabilities are $4.69 billion. By calculating the current assets minus the current liabilities, ADYEN is left with $2.4 billion cash on its balance sheet, making the balance sheet extremely strong and healthy. ADYEN can use this money to buy back stock, invest in the company, or buy another company. Now let's jump to valuations. ADYEN has a 5 price to sales ratio, a 51.79 PE ratio, a 30.46 price to free cash flow ratio, and a 10.67 price to book ratio. Pause the video and check how the current ratios compare to previous years. The valuation is not cheap, but typical for a company with the growth of ADYEN. Now let's do a discounted cash flow analysis to determine the fair price and intrinsic value of the stock. This is how my model works. I calculate the worst case scenario to determine the downside, a normal case and best case scenario. The first column represents the growth rate for the next 5 years. The second column represents the growth rate for the 5 years afterward. The third column represents the terminal multiple or the PE multiple at which the stock will be sold in 10 years. The fourth column represents the discount rate or the rate of return the stock will grow over the years. Considering an 18% growth for the first 5 years, a 14% the 5 years afterward, a terminal multiple of 15 and 15% discount rate. The intrinsic value of the stock is $1,519. ADYEN is trading at $900, currently giving the stock a 40% margin of safety. Finally, the 3M analysis: 1M for moat, 1M for management, and 1M for margin of safety. ADYEN have a weak moat. Currently, it offers top service for its customer. However, there are other competitors in the domain that offer similar services. Management did a great job thus far growing the company. The founder is the CEO and have aligned goals with the shareholders. The stock is cheap compared to its intrinsic value, especially if the company keeps growing. The balance sheet is strong and healthy. ADYEN has ample opportunities to grow its business by tapping into emerging markets, specifically in Asia and Africa, where there is considerable demand for digital payment solutions due to the rapid growth of e-commerce and mobile technologies. Despite the high-profile clientele and technological strengths, ADYEN operates in a highly competitive and saturated industry. Challenges like intense competition and cost pressure can affect the profit margins. Furthermore, as the company expands globally, it faces potential regulatory hurdles, data privacy concerns, and currency fluctuations in various markets, which could impact its overall performance. Cybersecurity remains a primary concern, and any security breaches or data leaks could significantly impact ADYEN's reputation and client trust. In conclusion, ADYEN is a great company with a great future. I currently have a portion of my portfolio in ADYEN stock. I definitely recommend buying the stock at a 40% margin of safety.